Archer Aviation NYSE, ACHR. 1. Industry and market potential. Archer Aviation is operating in the emerging eVTOL electric vertical takeoff and landing aircraft sector, which aims to revolutionize short-distance air travel, urban mobility, and potentially reduce the environmental impact compared to helicopters and traditional aircraft. If the market for air taxis and advanced air mobility develops as projected, some forecasts anticipate a multi-billion-dollar market by the 2030s. Companies like Archer could benefit significantly. 2. Partnerships and backing. Archer has notable partnerships and backing. For example, United Airlines has invested in Archer and placed conditional purchase orders for their eVTOL aircraft. Such industry validation can lend credibility, potentially easing regulatory and financing hurdles. Partnerships with established aerospace and transportation players are seen as a positive signal, given the early-stage nature of the industry. 3. Technology and progress towards certification. A major challenge is securing the FAA, Federal Aviation Administration, and other global regulatory approvals. This process is costly, lengthy, and uncertain. Investors should pay attention to Archer's test flights, certification milestones, and how quickly they advance toward commercial operations. Any delays or technological hurdles could impact the company's valuation. 4. Financial health and burn rate. As a pre-revenue or early revenue startup in a capital-intensive sector, Archer's financial situation deserves close examination. The company will need substantial funding for R&D, manufacturing, and certification efforts. Investors should assess whether Archer has enough cash on hand, how often it might need to raise capital, potentially diluting shares, and whether it can reach commercialization before running low on funds. 5. Competition and market fragmentation. Archer isn't alone in this space. Companies like Joby Aviation, Vertical Aerospace, and others, along with established aerospace giants, are all vying for a share of the future urban air mobility market. Competitive pressure might affect margins and overall growth potential. Understanding how Archer differentiates itself through cost, technology, safety features, partnerships, or speed to market is key. 6. Speculative nature of the investment. At this stage, investing in Archer is more speculative than investing in established aerospace companies. The industry is still nascent, and it's unclear which companies will emerge as leaders. Early investors are essentially betting on future demand, successful technology deployment, regulatory clearance, and operational scaling. This makes Archer a higher-risk investment that might offer a significant payoff if the sector takes off, but also comes with a substantial risk of underperformance or even failure if timelines stretch or technology disappoints. Conclusion: Archer Aviation represents a high-risk, high-potential reward scenario. If you're comfortable with speculative investments and believe in the long-term future of the eVTOL market, Archer could be worth considering as a small portion of a diversified portfolio. However, if you're risk-averse or prefer companies with established revenue streams and proven business models, you might find the current uncertainty around Archer less appealing. As always, it's wise to conduct thorough research, follow regulatory and test flight milestones, review the company's financial reports, and, if possible, consult with a financial advisor before making any investment decisions.